Welcome, friends. My name is Avinash and I welcome all of you to another interesting episode of Corporate Face to Face series. And friends, in these episodes, as all of you are aware, we introduce to you emerging companies from emerging sectors, and we talk to the promoters of such companies, talk to them about their business model, their growth journey, their business plans. And today, friends, we have got a very interesting company which is into the EPC and project management business, and which is going to hit the capital markets very soon. The company's name is Konstelec Engineers Limited, and we have the privilege of having the managing director, Mr. Amish Shah. Mr. Shah, welcome to the show. Thank you very much, for sparing your valuable time. I'm pretty sure that in this small interaction, we'll be able to understand, your company's operations in a much better manner.
Right, sir. Thank you very much. Thank you, Avinash ji. Thank you, team, for giving us an opportunity to present ourselves and to know more about the company.
So, Mr. Shah, first question, which is very basic, from my understanding and from the investor's point of view, if you could share with us, what is the business model of our company and what is the positioning of our company in the segment in which it operates? I believe we operate in the EPC construction segment, the project management segment. So, if you could share your thoughts on this, and in a small way, if you could tell us, Mr. Shah, how did this business journey start? Is it a family driven business? Is it a first generation kind of effort from your side, or is it a second generation kind of journey for you? So if you could share your thoughts and start.
Right, sir. Sir, to start with, sir, we are a family run business. It is started by my father in the year 1995. So I'm the second generation into the business. It's been 20 years that I have been into the business and have seen the growth structure. And from here on, we see no bounds, no limits. So there is a lot of room for, the growth of the company. So that is why, going to the markets, raising funds is very important for the growth perspective. Now about the business, we are into the EPC segment. We specialize into industries, electrical and automation. Electrical instrumentation and automation is our strength. Any particular project, we have a role to play when it comes to electrical instrumentation and automation. So any industrial projects is our market. Wherever we go, any industries, any new development of industries, any growth, any expansion plans, that is where we have a role to play. And that is the market for us to get into the segment where there is an electrical automation requirement, which is there in the industries.
Oh, fine, understood. Mr. Shah, now tell me one thing specifically when you talk about project management, EPC construction. Now, if you could tell us which are the manufacturing sectors typically which are target customers for you. If you could just spell some sectoral kind of some sectors, and secondly within your businesses if you could share with us which are the kind of companies or which are the customers where you all have done some marquee work. So on that, if you could share your thoughts.
Right. So, sir, we are working with marquee clients such as HPCL, BPCL, IOCL, Reliance, JSW, BARC, excuse me, ISRO. So these are some of our marquee clients who are there, and we play in the petrochemical sector, chemical sector, oil and gas, upstream, downstream. We have a role to play in the atomic segment. We have a role to play in the ISRO, the space research segment. Wherever there is a requirement of power, wherever there is a requirement of any process industry which comes into play, we have a great role to play there, and that is where our market remains.
Okay. Now, currently, Mr. Shah, if one were to look at your FY23 revenue, what is the mix of EPC and project management? If you could give us some breakup. And secondly, going forward, is the EPC business going to be the main driver for your business, or even project management will be a big part of your revenue going forward? So any thoughts on this?
Sir, when you say there is a very thin margin between when you say a project management and an EPC business. So, most of our contracts or most of our works are into the EPC segment. The project management comprises of a very small contribution of revenue in the project management segment. However, when you say EPC, it contributes the major component of our revenue. where there is an engineering involvement, procurement, material supply involvement, and construction activity. A
Okay.
project management activity normally involves expediting or supporting on the procurement front and giving construction management services.
Okay.
So for us, a project management is a smaller revenue, but the bigger market is an EPC segment. So we are trying to expand in the EPC segment where the opportunities are plenty.
Okay. So fine. I think, Mr. Shah, now a related question to this is that, in the next, say, 3 to 4 years, what is your, thought process? How big is the opportunity for the EPC construction market, and how will the company capitalize on this? If you could share your thoughts.
Sir, with the current thrust of our government on Indian economy, where lot of industries, lot of capex spending is being done by the government, the semi-government, the private segment, any project which comes up in any area, you know, let's say 1,000 crore project is there. So our involvement can be as huge as 250 crore in any project.
Okay.
So that is the growth, that is the spectrum that we are looking at. And we will want to capitalize on maximum on any industry, because our forte is not a particular industry, but there are a lot of industries where we are catering to. So scope for us is huge.
Okay. So I think, Mr. Shah very well articulated. Now tell me one thing, all these EPC construction projects, are all these projects basically tender based? You have to apply for tender and then the project comes to you. And secondly, what is important, what we have seen for EPC companies is what is the normal retention money which is there in these kind of projects. And as of date, if you could give us some idea, what is the retention money which is yet payable to you, from your existing customers?
So, a very good question, sir. When I say any kind of project for, I would just put it that way, that for us, the revenue of public sector or government is today 60%, and they are all tender based or L1 based, where there is auction, reverse auction taking place, and there is a competitive bidding which takes place. In our case, also, we have 40% of the revenue coming from the private sector, that is marquee clients such as Reliance, JSW Steel, Jindal Steel and Power, Jindal Fluorine. So these are some of the sectors which we are trying to play in a private segment, and we are trying to expand and grow our contribution on private. So we want to have a good mix of government and private segment going forward.
Okay.
As far as the retention money is concerned, uh, government segment and private both have a retention policy of 10%, which is held up during the entire phase of the project, which gets released at the end of when the project is completed, when the commissioning takes place. We have to, it is backed by a performance bank guarantee. When we give that PBG, there is a release of that 10%. So
Okay.
the performance bank guarantee duration is, for the defect liability period, which is 1 year after the project handover takes place.
Okay. And Mr. Shah, what is the balance as of date? Like I just wanted to know for FY23 also, if you could tell us what was the retention money in terms of unpaid by your clients. Any ballpark number also will do for us.
Retention money could be anywhere between, around 20%, maybe 15-20 crore of retention money is there,
Okay.
which is receivable in the forward years.
Okay. Okay. Now, next question, what I want to ask you is this: EPC construction market is very competitive. You need to be very tight on your costing, on your working capital. Now, tell me one thing: what is the level of competitive intensity, and in what way, Mr. Shah, are we efficient as compared to the other players? What I'm trying to understand from you is, what are the qualitative modes or what are the special qualities of our company which have kept us profitable, which has helped our business to grow? So, anything on the qualitative side, if you could highlight for our viewers.
Uh, Sir, we have been doing a lot of work in the oil and gas segment, in the petrochemical segment, where the safety and quality levels as demanded by the client and consultant are are of the highest nature. So working in those sectors gives us an ability, gives us a pre-qualification, which not many people are able to do that in that particular segment. So that gives us a lot of edge over the other competitors. Second is, if as we grow in the market, we are able to bid for large sized projects. So when we are bidding for large sized projects, competition in the larger segment is relatively less. So we are able to command better margins when we go to the larger segment. So that is the perspective which I'm trying to give for, increase in profitability over the period.
Okay. So basically, you mean that in the larger projects, you got much more better pricing power, you got lesser competition, and that is what the company strategy is, that you focus more on the larger contracts and where quality is very important. So is this understanding
That's right.
right? Yeah.
That's right. That's right, sir.
Okay, now let's come to the financials, Mr. Shah. We have seen that in FY23 was a very good year for the company. The
Right,
company
sir.
reported a top line of 162 crores and a profit after tax of almost 7.78 crores. Previous year, profit was just about 3.52 crores. Now, first thing which I wanted to understand is on the top line side, this improvement which has come, from 107 to 162 crores. What were the reasons for this? And secondly, in terms of margins, profits have more or less doubled. So can we expect this momentum to continue since we are now in January without giving a number again? If you could just tell us, how do you see the current year, that is FY24, how is it panning out? And what is your outlook, in terms of profitability going ahead?
Sir, financial year 24 is turning out to be a very good year because we had a lot of projects in hand during the COVID phase, which did not materialize because of the COVID conditions, which are now materializing, and hence we are seeing a lot of traction in the top line, and hence there is a good amount of profitability which is coming into the system.
Okay.
During the phase of COVID, you really had a lot of fixed cost. There was it was a challenging phase for everybody. And hence, we had a lot of impact on our top line and bottom line. But going forward, we have a lot of visibility in terms of orders in hand. We have approximately 600 crores of orders in hand. So this orders would be realized in the next 14 to 18 months.
Okay. Okay. No, fine. Understood. Normally, Mr. Shah, these orders which you say, normally the time duration is what, 12 to 18 months is the normal timeline when these projects are completed. I mean, that is the normal timeline.
Generally, I would say the range is from 8 months to 14 months,
Okay.
generally,
Okay.
depending on the size of project.
Okay. And Mr. Shah, in terms of the margin outlook, because as I was just asking you earlier, that your profitability at the net level has jumped significantly, even operating profits have jumped significantly. So, can we expect margins to be sustained, or in other words, can we expect some improvement? Because your business, I believe, is a combination of value as well as volume. So, if your
Right.
order book increases, then obviously margins should improve. So, is this
Right.
understanding right from my side?
That is right. That is a good understanding, and we expect as we go higher up the ladder, we expect that the margins would definitely improve going forward. So, as we bid for large size projects, we would be able to command better margin scenarios.
Okay. Now, Mr. Shah, the most important question which all our viewers want to know, if you could share with us something about your forthcoming IPO plans. I believe the company is going to hit the capital market. So, if you could tell us what is the size of the issue, what is the objective you're raising money, if you could share some, inputs on this.
Right. Sir, so as I already said, we have a very healthy order book. In order to, capitalize on the healthy order book, in order to expand and grow in the faster manner, we are going to the capital markets, raising money. We are raising 28.7 crore. The size of the uh, public offering is 28.7 crore. The company is diluting approximately 41 lakh shares, which is being offered to the public. And the structuring, it's a big book building structure. So that is how, we've been structured that along with our merchant bankers. Beeline is our merchant banker in this case.
Oh, no, understood. Mr. Shah, now one thing on the working capital side, since I told you earlier that this is a business where EPC companies are evaluated purely on their operational cash flow and their working capital management. So on the working capital side, if you could tell us what is the normal working capital cycle for both government as well as private customers, if you could share your thoughts.
So typically for any project, whatever work which is being done in a particular month, the revenue recognition comes in the subsequent month. and effectively the realization comes in the third month.
Okay.
So the cycle which is there, there is a 90 days of receivable cycle which is already there in the system. Apart from two areas where when you're closing a project, when you're handing over, the cycle is slightly elongated cycle. So we are working on that cycle where, when you're closing a project, the faster you close the project, the faster the revenue flows in.
Okay.
So effectiveness comes when you are able to, with your experience, how you are able to close a project in a speedy manner. That is the effectiveness of the entire working capital cycle which comes into the system.
So understood. Mr. Shah, now one thing which I wanted to also understand is that, in the past, I mean, not of course relating to you, in the past, EPC companies had a problem, when they used to when they used to give their pricing for a particular project, because the entire profitability of a EPC company is based on the costing. In between, if there is an escalation of cost, then that actually hurts your margin. So, in your last 20-25 years of business journey, has it ever happened that some project has gone wrong, or something has gone little much ahead of your cost estimates? And how do you actually do this? Because EPC business is now getting more and more interesting. People have realized that only those companies which are very good in pricing, in working capital management, will survive. So in your company, if you could share some thoughts on this, because the entire business model is structured on the project pricing, that is your EPC construction pricing, what you quote in the tender, and obviously how you control your costs. So if you could share your thoughts on this.
Sure. Avinash ji has very rightly said, for us, any structuring any contract, any escalation in the raw materials, the impact is there on the entire contract. So it has happened in couple of occasions where, there has been abnormal rise in the pricing. However, when we secure a project, we ensure, when we bid for the project, we ensure that we take care of escalation plus minus 10%.
Okay.
So that, because as we know that we do not get any kind of an escalation during the contract phase. So
Exactly.
any raw material is already built into the project bidding. Our basis of securing a project is profitability. If there is no profit in the contract, we do not generally want to get into that contract where there is no profitability. So the
Exactly.
basis is profitability.
I think very well said, Mr. Shah, because this is a very important input from your side, that you look at the profitability of the project before you actually take the project. Because there are many companies which take up projects, but unfortunately at the end of the project it does not turn out to be profitable. So this is a big positive for you. Now, Mr. Shah, one more question from the investor's point of view. See, you have been with the company for more than 20 years. It was started by your father. Now, new set of investors are going to join you in your growth journey. So, in a very short, simple message, if you could tell them what is it that they can expect from, the company's growth plans in future, because obviously from the market point of view, everybody wants to make a reasonable risk reward. So if you could give them some small message, before the public issue, that would really be great.
So, in our case, sir, as I already said, we have a healthy order book which are there on the books. For us, there is no limit to growth. So it is here, I would request all investors to participate in the offering. We would definitely look out for giving them better results in the future, in the next 2 to 3 years. And they can expect a healthy returns out of the company's growth.
So fine. Now, last question, Mr. Shah, is as we ask every promoter, and you are also aware that every business has got certain risk attached. Now, in our business, that is the EPC business, fortunately, now India is considered to be a growth story. Manufacturing is being pushed by the government. But typically in our business, what is the main risk which we face? And, in these 20 years, how have you managed this risk in a proper manner? So, if you could just share your thoughts.
Sir, this is related to the earlier question that you asked, when you have a lot of raw material pricing, fluctuation in the raw material pricing. This right now stands as the biggest risk for us.
Okay.
And any changes in these raw material pricing, we have to ensure that we cover these pricing for the entire duration of the contract. So as I said, profitability is the basis of securing a contract. We would want to ensure that any changes on these raw material pricing, we do not get affected in a larger perspective. So we want to restrict and limit our risks to not getting too much leverage on the raw material pricing change.
So I think very nicely articulated by you, Mr. Shah, and thank you very much for sparing your valuable time. We could understand your company's operations in a much better way. So friends, if you
Thank
like the video, please like and share the video. And Mr. Shah, once again, best wishes to you, your entire management team, and best wishes for your forthcoming IPO. Thank you very much.
Thank you, Avinash. Thank you. Thank you, everybody. Thank you.